Brian. We got Don and Cred on the line. Hopefully round 2 is going to work here. Let's just skip straight to it. How you doing, guys? Don, you're on the left.
I'm doing all right. I mean, it's moving into Christmas territory, and I still don't have gifts for my girlfriend's mom and her sisters and her grandparents. So I'm a little bit of a pickle, but otherwise I'm doing good.
This is where you break out the tools and you start doing it yourself.
Oh, I mean, that'd be good, but I don't think I have the necessary skills for that.
I believe in you.
I'll try my best.
Cred, how's it going?
I mean, it's going. I'm trying to keep it cool. You know, you go onto Ledger's Twitter, you learn about race relations in Alabama. You go to Donald's Twitter, it's like, I don't give a fuck what you think about me. I'm gonna give you my opinion. I'm just like, oh dear, what's going on here? So I'm chilling, man. I'm chilling. I'm also building my office finally, so I'll actually have a desk and a PC and that type of stuff. So rip laptop gang.
Exciting. Is this your first desk ever?
No. So I moved to a new place. I haven't gotten around to doing anything yet. So
yeah, what he doesn't tell you is that's happened like months ago.
Yeah, happened in like August.
Oh, I get some fucking help.
I know, yeah, August, September, and I've just been on like a half desk with my laptop, and yeah, it's a disaster. But you know, stuff's finally being done now, so all good. Just in time for Christmas.
It made me think if you were like Kobe style, because he loves to just be on laptop only and not really have a workspace, which I can't do. I get claustrophobic.
I mean, it's quite liberating because I feel like if you're in full kind of battle station trader mode, you might be tempted to overtrade just because it looks cool. And you've got like 3 screens, you're thinking, oh, I've got to use them. Otherwise, what's the point? Whereas if you're just on one laptop screen, you're a lot more humble about what you can do. So maybe that's been helpful.
That's fair. And looking at this Bitcoin chart, there seems to be little reason to be in full battle mode right now.
Yeah.
Don, you want to give us a rundown? Actually, you've got a whole chart with lines on it, so let's just let you.
I mean, do I want to? Probably not, but
you have to.
I do.
I have to do the faces on the side thing again because once again we are at the lows.
It's beautiful. Huh? The monthly, nice and red, starting to kind of roll down again, which is obviously not pretty. And given that the next support's at 14K, that's also not pretty. So monthly looks kind of shitty, but I don't really think it's showing the full picture. The weekly is better, but it's also starting to look shitty, which doesn't make it much better. But yeah, we're in this area where like 16K support. It's basically, if you go here to the left, it's that complacency bounce high. And that's where we found support, right? Where we bounced. And basically, the moment it started looking somewhat decent, the S&P just completely rolled over. And Bitcoin was like, fuck yeah, I'm in. And so we've got this week, which was last week, which looks honestly quite shitty. As long as 16K holds, that's not really the worst looking chart, but it's really not looking good either. It's like this thing just looks like it wants to me anyway, wants to low volume chop around, which is not good for any trader because low volume chop is pretty much the worst to trade. I've seen a few people argue on Twitter that, oh yeah, they can trade this stuff, but I think like anyone that says like they're good at low volume chop, I think they kind of have a few screws loose because I mean, the bigger size you trade this, the worse it gets. And even with small size, you get complete chopped. I mean, if you just look on the 5-minute charts, it's horrendous. So yeah, it doesn't really look that good on the weekly. And then when you go on daily, it doesn't really get much better either. We had this range, this entire range here. And we broke to the upside, which was quite nice. And then, like I said, the S&P started rolling over and Bitcoin just went along with it. And now we're in this shitty situation where we have a false range breakout, which, I mean, technically you have to, like when you have a range, at least this is how I trade usually, like when you have a false breakout to the upside, you're expecting range low, and the same is true if you have like a false breakdown, you expect range high, right? And in this case, We're right now struggling with the midpoint of the range. Range low is like quite a bit lower, depending on how you want to draw it, 16.2 or 16K. And yeah, it doesn't look that pretty. If we kind of can manage to get back above like 16.8 or 16.9, it starts looking a little bit better. And then if this, for some reason, managed to have like a Christmas rally above 17.6, I think it starts looking really good. But it's way too early to say. If I was leverage trading this, I would want to either like be in a short position or like aggressively short the midpoint. Given I only have spot, I don't really mind, like I'm holding it, but it's not looking too pretty. It can reverse, like I said, 17.5, that kind of range high. If we get taken, like if we take that again, it start looking really good because these fake outs usually don't occur too often. If you come back up there, then I would assume that this was just like an attempt of a breakout, but a slap down, people start shorting, and then you can have like a proper breakout. But until that happens, I mean, looks shit all in all. Like the monthly doesn't look great. It's not near support. It's not near resistance either, but it's like in the middle of nowhere basically. The weekly doesn't look too great given 16K produced a bounce, but we're kind of like coming back to it. And like the first test is a nice test. The second test is a little bit less so, but it's not horrific. And then you look on the daily and it's kind of bad. So all in all, not too great.
Isn't that that move up kind of depressing though? Like there's very little appetite there for additional upside. I mean, it didn't get on the weekly, it's like hardly even touching a wick. It's like barely wick to wick. But even on the daily, like that last day up got faded completely out of this, wherever you try to assign that congestion range from previous lows that we broke down from.
Yeah, I mean, it's kind of sad, but the thing is, like, at least I personally would attribute it more to the S&P than anything else, because the S&P actually had a worse day on that day. The follow through.
The problem is we had not followed up with it.
Yes,
for the positive, and we had talked about that. Like, what happens when the S&P comes out of this rally? And we found out.
Yeah, fuck around and find out.
We fucked around, yeah.
But
look, I think there's also some like trend bias here. Like the market were trending up, and you get like a failed breakdown, and then it entered back inside the range. Very few people would argue, oh, look, it didn't pull all the way back to like the super obvious deep into the pullback level before resuming the trend. I think maybe it's worth applying similar logic here, where this looks just like this looks like bearish continuation from a purely technical sense, where you have a failed breakout in a downtrend, which is generally a pretty strong signal. And while it didn't get perhaps as deep as the quote-unquote obvious retest levels, it did basically spike every single high of the consolidation that we've been trading in. So it did something. It just didn't go as far as perhaps as comfortable. And I actually agree with something Don said elsewhere, that if it started rallying towards that 18, 19K level, I think the chances of bearishness, as weird as it's going to sound, they actually go down. Ooh, that's not me. Sorry. Because like generally speaking, when you get these types of high time frame breakdowns in Bitcoin, they don't come back to retest those levels very cleanly, especially post breakdown. So if they do squeeze back to the mega breakdown levels, like the 6K retest or whatever else, that's usually that tends to be bullish. That's not where you get your bearish retests. So I think the closer it got to 18, 19K, oddly enough, the lower the chances of like bearish continuation from that exact point. You probably get some sort of squeeze higher or whatever on this occasion. I mean, look, I remember in some detail covering the failed breakdown at 45K on weekly open, where we're all like, hey, look, a daily weekly breakout is a big deal, but if it isn't, oh no. And I think we're faced with similar-ish circumstances. It's not as clear because, like Don's got his level over there. It's like a, triple top, clear catalyst, etc. That one was very nasty. But on purely technical terms, we're in a downtrend and you have a failed breakout in a downtrend, and the midpoint is acting as resistance. I mean, those at the very least are raw ingredients for continuation, and I agree with everything else. If it reclaims, the chances of a double failed breakout tend to be quite low, so that in itself presents a, if you want to get long, that's a decent way of doing it, I think. In terms of getting long on pukes or to the downside, I'm personally not mega keen on catching the third or fourth test of that range low, and I'll probably defer to sort of monthly, weekly structure or something else at that point. It's like above 17 or wherever that level lands, cool. We're in business. Anything else, I just take the daily failed breakout in the downtrend signal very seriously, and I'm not rushing to catch whatever's left of that on the long side at least.
Yeah, I mean, one thing that I do want to say is that, I mean, the TA looks horrendous. There's no way to kind of talk, like, you barely can make another case, right? But my gut feeling and kind of like everything in me is just like, okay, this is probably going to go up. This is why, like, I have my positions still, and I'm probably going to keep them, even though, like, I'm going to leave for the rest of the year tomorrow, actually. So I will not be able to kind of change my positions around. I'll keep my positions. I think, like, for some reason, and I mean, TA very much does not agree with this, I think we're going to go up. But yeah, just wanted to kind of throw that out there. Don't copy trade something that doesn't make sense. It's just my intuition, basically. And I mean, that could be completely wrong, but yeah, I feel like we're going to go up.
I love how the hopium we essentially have is completely gut based, right? Which is is fine, but it just kind of shows you the state of the market, right? It's like you really have to dig.
Yeah, I mean, like I said, though, we're in a downtrend. We've already gone down like I don't even know what percentage we're down now, 75%, 70%, something like that.
Yeah.
So we're in this mode of we're looking for bottoms, but you still have like the opportunity to go down another 50% or something while you're hunting for it. So you're trying to avoid that. And there's very little in the global market to give us that much additional hopium. So for like roaring upside, so you're just trying to find where's an appropriate place to get in, or dollar cost average, if that's what, like Andre in the chat spoiled the show, probably just said GM dollar cost average BTC and ETH. It's like show summary.
I'm so bad at DCAing. I can't do it, man. The best I can do is DCAing like really high time frame levels. Like when the 6K broke down, I just started buying at like mid 4K and had some powder for a bit lower. That was kind of the closest I could come to DCAing, but it was still mostly a technical oriented trade, or DCA if you want to put it in those terms. I'm like, I can't switch my trader brain off from those sorts of things, because my logic has always been, if I'm going to buy, then if that's going to be a compelling buy, then there should be some sort of setup to associate with it, or a reason. And then by definition, I end up going back to the thinking in trading terms. So I've never been good at that. And I think it's worth knowing, if you do start DCAing, what's your time horizon for that? What increments of dry powder are you going to deploy? Are you okay with a large drawdown? Are you okay with a large kind of opportunity cost and tying up your capital for that? And those are all kind of very tricky questions to answer. Whereas if you take an approach of like, I trade better in an uptrend, for example, then you might have to wait longer, but the opportunity cost element goes down, and the uncertainty or lower probability is skewing more in your favor as well. I think people are just so like upset at this point at the prices. A lot of people, and they've historically not been around for anything remotely resembling these prices, because a lot of them entered in like 2021, whatever it may be, that they just kind of feel like they have to DCA, and it's one choice among many, but there's no real, fundamentally there's no reason that you have to do it. It's just one choice among many. It just lets you trade now, which satisfies people's short-term cravings, as opposed to conceding and saying, well, these conditions suck, there's probably going to be a volatility contraction, who knows about price, etc. Maybe I should wait. I think it just lets people, like a lot of people, I think, have really bad reasons for wanting to trade, and they concede those reasons, but then as long as you masquerade it as, I'm just DCAing, you basically get a free pass for having like spurious reasoning. But maybe I'm just super cynical and jaded.
No, I think, DCAing, just like active trading, needs to be done with a plan. Like you could say, I'm DCAing and I've got $10,000. I'm DCAing $1,000 a day for 10 days. So you get the average price over 10 days. Like that's basically just swing trading, because now you are over the course of 10 days fully. Like you're not really getting the average price over time. But I think if you DCA with a plan, if you say, okay, well, I want to be exposed to X amount of dollars over the course of some broader period of time, then as long as you're comfortable with that plan and the prices that you may end up getting, lower or higher, like if you haven't picked the bottom, because whether it goes higher or lower, you're going to end up with an average price over that period of time. And therefore, you're not going to have the complete lows. You're either going to be above the actual lows because you did it too soon, or well below the actual lows because the market moved up without you. But you will get the average price over that time. And if you do it with a plan, you say, generally, I'm happy with this price. And generally, I have the capital and the ability to deploy that capital and the desire to lock up that capital, as you noted, over 2 years or something like that, then go for it. Fine. I just think a lot of people, myself included, are not going to do a great job of like, oh, well, this is the bottom. I'm all in, and here we go. Like personally, I've left capital in, but what I have in now, like I've been pretty unwilling to like get out of the market with the capital that I have in right now. But I do have motivation in certain environments to add to that with like fresh capital from the world, you know.
Yeah, for sure.
So I just think you gotta approach it with a plan. So I think you made a good point. DCA.
Yeah, most people don't, right? That's the thing. They'll DCA like random amounts in all conditions. I'm not like against DCAing per se. I just think you should also just beyond the layer of price, think about time, volatility, and opportunity cost. Like if you factor those three things into your DCA model, you'll be a lot better off doing so, I think.
You know what I find that I feel more comfortable with is even if I want to stay exposed to the market, there's a lot of ways to be exposed to the market. So your exposure can be through BTC and ETH. It can be through some derivative strategy. It can be structured products like GBTC and ETH. It can be, but it could be down the trail of altcoins, and you're like, oh, these are the ones I think are going to go 1000x. For me, one of the things I like to consider in times like these is where do I have opportunities to pull money back to the things I believe in the most. So like if I still have exposure to something where I just don't have a high conviction in it, then one of the things I can do is pull it back to things where I have higher long-term conviction, so that I'm capitulating at a better time, if that's such a thing, right? So a couple of things I've done is like sell some NFTs where they actually did well on a relative basis, but not so well on a dollar basis because they still tracked ETH. I actually deployed some funds to GBTC for a premium trade, and interesting news there this morning. And I just think there's a lot of different ways to approach the market where you can still have exposure, but you're trying to identify like what's the best way to maintain that and create.
You can also get a job like in crypto. I'm not saying that cynically, isn't like, oh, just get a job, lol, even though that's always good advice. Like that's another form of exposure people don't consider. That's like less directional and builds your network. Like, work in crypto, get some tokens thrown your way, build a community, and then you can DCA some of whatever you earn as part of your crypto job. That's taking risk in crypto by definition.
It's also it's also taking risk off from trading. Like if you're relying on trading for income, like this is a horrible time. This is when you will go broke doing that stuff because you're trying to force it to make your income.
For sure. We bored Don so much, he's throwing up the EMAs now. Let's hear this.
No, I just wanted to, like, the whole like DCA thing without a plan is like horrendous advice, I think. Like if you do it with a plan, fine enough, but without, because if you look at these EMA, right, 50 and 200, if you bought anywhere, like if you just DCA'd over the last 200 weeks, or like 50, and you're kind of like shit out of luck, right? And if you just bought like a while ago, right? And this is almost true for any market in any kind of circumstance. Like if you just buy everything, you're gonna be better off in the long run. It's just more stressful to hold. Because like it feels good, right? When you're just buying and then price goes lower and you can buy like more for the same amount, and then it goes lower and you buy a little bit more. And you always know, okay, I'm going to have some money left that I can still put in. So I'm not too worried about prices going lower. But in general, like if you do it over too long a time horizon, you're just going to lose money.
Wait, can I just hold on? I actually have a counter to this because you said you're going to be miserable or whatever if you DCA'd for 200 weeks. I think in that long-term sense, that person is probably doing better than the vast majority of people who did not DCA, because the vast majority of people who did not DCA over a long period of time were buying at the top, like much higher than 24,000. You know,
I mean, it depends. Yeah, it depends on obviously where you start. But like, let's say, like, if you start DCAing now, right?
no, I'm saying
And
by definition it doesn't. If you did 200 weeks, your average price is whatever that is. You know, like if you DCA forever, it's going to start flatlining that out, and you're going to be somewhere in the mid 20Ks for your cost basis, which
yeah,
is
but I mean, if you
I'm
just
not.
buy lower, like if you just buy 5K or 6 or 7 or 8 or 10, you're going to
Yes,
be much, much better off than the person that just keeps
yes.
DCAing.
If
I mean, I think the best
you bought the
example.
bottom, you'd be better off than not buying the bottom. I
Yeah,
agree with that.
no, but I mean, even like, I think the best example for this is Sailor, right? Because he's basically DCA'd. He had a very,
He
very
bought the
good
top.
entry. Yeah, but he started buying down here, right? And then he kept on buying, and then started, like, he basically was like, holy shit, I need to get more the further this went up while DCAing, and now his average is complete and utter shit.
I think
Whereas if you
I think
if you
Sailor
just bought,
actually
you'd be
made
fine.
I think Sailor made one of the biggest mistakes of a DCA strategy, which was as he felt smart and was more and more right, if you will, he kept DCAing heavier. So it was
Yes.
exponentially weighted as it went up and as he was right. And therefore, he didn't actually capture the average price. He captured much closer towards the top because as he was euphoric, he was doing things like going out on leverage with his DCA. Whereas
Yeah.
it should probably be the absolute inverse of that, or just equally weighted, whatever. I mean, we kind of turned this into a DCA.
I mean, it's interesting, right? But the thing is, you get you touched on a good point, Ledger. You get trapped on either side because as the market's going up, you want to own more of the coin, and so people are going to be inclined to either increase their frequency or their size. And then, if the market's going down, then you're just continually buying a downtrend. So there's sort of almost no good answer. I think it comes to the core of the issue, which is that you have a market that's incredibly volatile, incredibly cyclical, and aggressively in how cyclical it is. And you're trying to apply this kind of smoothened, in all conditions, fair weather strategy for this mega vol asset that goes up like a lot and then basically wipes out all of its gains in a pretty short period of time. Especially you have to realize also, to whom does DCA practically appeal? It's touted as the mantra to newer investors in the space in general. They're told that trading is bad and you should just DCA Bitcoin. And by definition, a large proportion of those new participants with no experience and who don't want to trade are going to be entering mid to late uptrend. So for them, the experiment is already skewed to the downside or to their detriment, because the types of people who end up DCAing, their entry ends up being fairly late cycle by definition. So they get very little of what's left of the upside, not that they have a selling strategy at all, and then capture all the downside by continuing to buy the dip in the trend, right?
I think that's completely fair. That's not the way I approach it when I talk to people. Not that I'm trying to give them financial advice, but I never tell people to DCA when they're actually asking me about crypto. Because when they're asking me about crypto, it's a horrible time. Like, I'm thinking, all right, time for me to DCA out. You know what I mean?
Yeah, they're your exit. They use friends as exit liquidity, Ledger. That's not good.
I literally tell them, I'm like, this is a very, you're asking me because you're hearing about it. You're hearing about it because it's hot. It's hot because it's gone up a lot. And this is not an easy time to enter the market. You will probably be underwater at some point. My general word of caution for anyone, the 2017 cycle, 2021 cycle, was you need to wait until stuff at least drops like 50%, or at least I would, at a bare minimum. And if we go full bear, you need to be prepared for like 80% type downside. And what I've told people at the same time, like when my, family or friends or neighbors or whatever, like these people in real life, when I see the market, like I told someone that was asking me over and over again during the bull market, and I kept telling them, don't buy. I literally was just like, don't buy. And then when ETH dropped below $1,000, I messaged them. I was like, I think you can confidently DCA for like the next 2 years and you'll be happy in 5. But to me, that's treating DCA as still part of a broader strategy. It's not a mindless forever, and always type of thing, which I think you can maybe more safely do in other markets. To your point, Cred, about volatility in crypto, like in the S&P, it's probably not the worst thing to just DCA forever and ever and ever. Because the structure of the S&P is always to be the best companies in the world. Like it's biased to go up because it throws out the trash. In crypto, we don't really do that. You just go down with the trash,
Yeah, I mean, I think it's a decent strategy, especially for people that are new to the space, because they're gonna do mistakes if they don't. Like if you're all in what you want to put in and then it drops 50%, you're gonna shit yourself, which is how it is. Whereas if you just start buying, even if at the end your average is worse, because it might, it's still better for you because you're not gonna sell the lows. So I think it's like a decent strategy. It just in general for me, it doesn't have too much appeal. Like I usually just buy when I think it's a good time to buy, and then
But you also know how to sell, and a lot of people don't.
that's true. I mean, technically I always sell too early,
But
but
even if it went
yes,
down further, like you have spidey senses and technical analysis at your fingertips and market sentiment that you understand, and you have some level. Maybe it's slightly profit, maybe it's your entry, maybe it's 15K, whatever. Unless it's like you think this is the final one, but you know how to cut your losses so you don't lose everything in the
yes,
downside event.
yeah.
Well, the average
Where-
DCA, it doesn't get guidance as to when or how to sell, right? The answer is never, or in like 5-10 years when Bitcoin's the next monetary standard, whatever type of thing. It's like at least half the equation is missing. And it's cynical because people basically are made or broken cycle to cycle. And then for some reason, people ask for generic advice. You just ignore the whole cyclical element and just tell them to get as much exposure as they can over like a large number of years, even though if we're going to be sort of realistic and maybe even a tad cynical about it, most people asking like, oh, how should I buy Bitcoin? How much should I buy? They're looking to make money like this cycle. If they had like a serious 5-10 investment horizon, whatever, it probably wouldn't be Bitcoin ETH for most of these people. They're probably allured by the volatility, by the cycles, and the all the stuff that comes with it. And then we give them generic like multi-year advice that ignores core market structure tenets like the volatility and cycle length. So, and also didn't tell them when to sell. So for me, it's tricky. I never tell any of my friends the DCA. I try to avoid the advice in general. If I have like a very, very high conviction kind of market breaking type of day, I'll generally share that with the ones who ask or I talk to, but I don't tell them to average, and I don't make sort of multi-year
There's
assumptions on their
ones who are
behalf.
always like, "Hey, Cred, what should I be doing?" Every time you talk to them, they want to know like, how should I be approaching this market? And you're like, all right, well, let me break out my crystal ball.
Exactly.
Yeah, so I'm only talking about it for those types of people. It's not like I'm like evangelizing crypto in my day-to-day life. I definitely do my best not to tell people I'm in crypto.
Same. Avoid at all costs is my policy with this thing.
Mhm.
Yeah. But when people do approach me, or if like if they're like one of the people that just is always wants to know, I don't. Selective DCA is a strategy of mine, I guess, in terms of trying to approach the market with them. Shall we talk about the Barry news of the week? Have y'all seen this?
Oh yes, we should.
Go on.
Yeah. There was an article Barry's first comments of any sort in weeks, and it was in the Wall Street Journal, and it was basically that if GBTC cannot be transformed into an ETF, then they may try to enable. Oh, do you remember the term? I should have looked it up. I forget what it's called, but up to 20% of GBTC to essentially be like sold or redeemed or something to narrow the gap on the market. I just messed that up bad. I'm going to Barry Silbert's Twitter right now to resolve it.
Oh, it's an odd term. I read it like 10 times and I forgot it as well. So.
Yeah. What they're probably not going to do is allow me to actually a tender offer. Thank you.
Yeah, tender offer. Yes.
Thank you, Barry. Oh gosh, the Wall Street Journal, man. All right, there we go. Yeah, so a tender offer to allow them to figure out an additional way to narrow the gap here. And it's having an effect this morning, at least. GBTC is up 4%, while Bitcoin is, I think, flat or a little down. They own what? 10%? Yeah. Genesis and other affiliated entities collectively own nearly 10% of the total shares outstanding TC. They're only permitted to sell up to 1% of the total shares outstanding into the public markets every 3 months. So they can't dump. They can only dump softly on on people. But yeah, so this would enable people to return capital to GBTC holders via a tender offer or ETF. So yeah,
It's also pending SEC approval, right? Even that, I think, needs to be approved. I think the chances of being ETF, especially after this year, and in general, are pretty low. I'm pro Bitcoin spot ETF in general because I think the products we have now are so garbage that they almost make things worse. We have a bunch of kind of inverse ETFs and futures ETFs. All these are expensive. They don't track the underlying properly. You know, GBTC has been a disaster for investors. So like a spot ETF fixes a lot of that. But I see no regulatory appetite for that type of conversion, especially not after the year we've had. And all these lawsuits and lobbying don't seem to be
kind of insane,
helping either.
Because these products still exist. They still are relatively accessible, but they're highly inefficient and stupid. And they could be better reflective of actual Bitcoin, but they're not. Like it's not a policy that protects investors. That's nothing new. But what is interesting is something that's not an ETF as a potential partial solution for this massive discount. What is it, like 47, 48%?
It's 49 or was 49 this morning.
It bottomed out at 49 and it's up a couple percent today. So yeah.
I feel like this is like a band-aid. I feel like structurally the change will have to come from like an ETF or whatever the Reg M filing was or something else. This to me is like short-term band-aid while they're still basically hoping for ETF, and I still rate the likelihood of that as fairly low. But you know, I'd like to be wrong on that one, unironically.
The thing is that this is not approved, right? It's just them like basically saying, "Oh, this could fix some of it."
Yes.
So it doesn't really help any. It's basically just rumors. I don't know how likely it is that it gets approved, honestly.
You know what I think it is they are wrecked on the discount themselves. They need collateral to be able to raise money and not go bankrupt. This is the only great product. So if they can do anything possible to narrow the gap on this, it gives them stronger collateral for being solvent in the rest of their companies.
Yeah, probably.
They just sent out a tweet thread. That's funny. Literally, as we're talking, Grayscale. It's actually seemingly a nothing burger. It's like an end of year letter type of thing. But we still don't know the resolution to the whole Genesis DCG situation, which is crazy. I honestly thought we'd know within a week or two which path they're going to go down, but now it's just messy. You have like independent creditors groups. I saw some people apparently selling some of their claims, and you know, with regard to Genesis, the whole thing is very messy still, and that's not great. Because as a reminder, Genesis is like completely core to crypto market structure as the biggest lending firm. And, you know, DCG and specifically their GBTC product is like the sort of biggest institutional product that we have and holds a ton of Bitcoin. And they're basically not working as intended. Let's put it generously. So that's not great.
Yeah.
This year, we saw new institutional investor adoption amidst the continued development and evolution of products. It's like, yeah, I'm sure those institutional investors feel great now.
Yeah, they're really happy. Institutionally adopted and institutionally abandoned all in 1 year.
Orphaned at this point, yeah.
I think overall, though, do you think Barry's strategy was actually relatively successful? Like the silence was deafening, but everybody that opened their mouth was worse. Maybe it was okay. Like maybe he took the right PR strategy.
Well, it's unresolved for now, so it's hard to tell, right? You have to judge it by its consequences and conclusions. We don't know which way this thing is going to go. But I agree with you. In general, all these exchange CEOs tweeting and everything else is just exchanges themselves tweeting. It's just been a disaster. So
yeah, everyone's been embarrassing themselves basically. At least Barry has not been doing it. Like even the exchanges that didn't end up going bust, like embarrassed themselves. In my opinion, anyway, like CZ's tweeting was at points like erratic at best. In my opinion, we had like a bunch of people opening their mouths that shouldn't, and yeah, I mean, I prefer this honestly. Like, I prefer just silence and kind of figuring out a way to deal with it over like just being on Twitter, being like, oh, just being on Twitter Spaces or something. I don't know. It just seems so stupid to me.
Oh man, did y'all see the votes on? There was two of note. Elon Musk saying, "Should I still be CEO?" And even better, that Mario guy below saying,
Yeah, it was like 65% said to stop your spaces or something. Didn't,
yeah,
I think
2/3
that
of the
was
people
the
said, please stop, which is incredible. Yeah.
That gives me a bit of hope, at least.
Should we discuss any macro? What's going to change your mind? You're not DCAing, as we've thoroughly discussed. So, what convinces you of potential upside in this market? Cred, do you want to either drive or talk?
I can screen share very, very briefly. One moment.
Yeah, sure. While you're doing that, as we've talked about before, the S&P just doesn't look like it's going to do anything special to me right now. Like, I wouldn't anticipate too much. It had an opportunity to break out, didn't, and so now more sideways.
Yeah, this is my S&P chart.
Oh, nice week.
It's on the weekly, which has the levels from all the time frames. To me, this rallied into, the FOMC rally was into monthly levels, didn't quite hit the weekly, but on the monthly it turned, it just basically reached the top of its previous range here, and then started turning around, quite impressively. If we 50 IQ this and look at this, that looks just like a lower high, that to me is a lower high in the context of a downtrend. So best case scenario is that the market finds support once again at 3,700. And that's where we get like the market wicked it here, and then maybe you get a candle body here, keeping this over-under structure intact overall, low, failed breakdown support. That's absolutely by necessity, like the best case scenario, that this support holds and then the chop of some sort continues, because the alternative is basically trend continuation, that this rally was the lower high, and since we're downtrend, after a lower high you get a lower low. That makes the lows vulnerable, and then you're looking at sort of kind of COVID-y price action, and that would take Bitcoin to not very good places alongside it, most likely. So as far as levels and everything else technical for the S&P, I think if it wants to like, the first sign of progress would be getting back above that, 3,900. That's a really good level on all time frames. You can kind of see on the weekly, on the daily, it's been very almost picture perfect, which makes this breakdown all the more ugly, because like this level doesn't really fuck around much, and it fucked around here and not in the right direction. So as a first sign of progress, anything above 3,900, maybe we take another stab at the range high, or at the very least avoid poking at the lows. That would be interesting. As far as structure, support, etc., I still think it's very much dire straits, do or die, now or never, 3,700. And if that's not good enough, and we've already had the bounce from that level, then you just have to assume trend continuation. And that's the thing, even if you're making bullish crypto cases, the best you can make on a technical basis is that, oh well, but the bottom's in and we chop. And it seems like people are making the same argument for the S&P. Oh well, maybe we just chop. And to me, that's almost its own unique form of complacency. When you have a downtrend, the downtrend is acting as you would expect the downtrend to act, but then you just simply go back to the caveat of, oh well, maybe we just chop from here. It's like, well, like chop in itself isn't an argument for trend reversal or a slowdown in the trend. So I think you need to be very cautious of taking for granted the lows that we have in the market and just assuming that everything else is just going to hold and we're going to chop. I mean, very possibly, but I'm also aware that, from just purely from a technical and market structure point of view, we're still in a downtrend. All the breakouts have failed, the supports are being cooked, lower highs. And so if you're going to bet on the lows, I think technically for a bounce, that's defensible, but taking, as a fact that the worst that market can do is chop, I think that's perhaps unsupported. That's my broader point there. Yeah.
When I say that, it's mostly, therefore, I don't have a trade to take. It's not necessarily an excuse to hold. Somebody in the chat, who was this? Dom. 50 IQ says inverse head and shoulders forming. I guess, Cred, you said lower high. I disagree with Dom. I say that's the 80 IQ take.
Well, the inverse head and shoulders would be the the retest of this level. Basically, it'd be a very ugly one, but the structure was essentially the same one, right? Low, lower low, and then some sort of higher low at that support. But I think you can, you don't have to speculate as, is this going to be chop? Is it downtrend continuation or whatever? We'll get our answer if the market reaches the support. We'll get to make that determination. If it doesn't want to do that, I think the first sign of progress would be above 3,900, and maybe we're safe from this retest for some time yet. But I think those are the two levels that matter purely from like a trading point of view: 3,900 pivot, 3,700 pivot, and then roll the dice.
my problem when people talk about head and shoulders on a diagonal like that is, to me, what makes that a pattern worth paying attention to is that it's got equal levels on the shoulders. When you have a slumpy set of shoulders, therefore a higher low or higher high, whichever direction you're going, lower high in this case, it just makes for a weaker argument for that pattern.
Sounds like you're body shaming, Ledger.
I am. Just, this is not as healthy, Anyway, so yeah. In combination, the S&P, and then are y'all paying attention to the Dixie? Because it depresses me every time I look at it. But
I'm waiting for it to like do something meaningful, because it hasn't done any significant reclaims yet or anything of the sort. It has been just downtrendy. There are some divergences building across momentum oscillators as this is kind of coiling up. But I do think, yeah, if this either this diagonal or basically you just get the impulse confirming the divergence, that's just going to be more pressure across risk markets, and we don't like that.
Right. There's a decent amount of wicking on the weekly chart there that you were just showing. I was also going to share the green box that I've had on here for however long, and it wicked out of the very tip of that, so really there wasn't much appetite to get lower. Maybe if it goes down another push, you'd get like 103 or 1017, and if it got below that, it would really properly put it kind of in a purgatory type of mode. Maybe y'all disagree with that? Generally, I mean, to me, this looks like the parabola broke down, but now you have an opportunity to see strength again, which would, as you noted, be terrible for risk markets.
It's kind of depressing, right? That we had like this massive nuke on the Dixie for like 3 months, and we didn't have any action whatsoever on crypto. Yeah. And like you said, I think the problem with this kind of stuff is, right, like when crypto doesn't bounce while the Dixie just completely giga nukes, is that we're exposed to the same risk that we had with the S&P, right? As in, like, the moment this starts bouncing, and it will at some point, we're probably gonna get like a proper nuke on crypto again, which is not nice if you don't get the upside, right? Like, I'm down to sit in crypto and it goes like, when it goes up 50% and then takes a pullback of 20%, that's cool. But if it doesn't go up 50% and then takes a crash of 20% every time something goes against it, and it doesn't bounce when everything else bounces, it's kind of depressing.
It's all take, no give.
Too. Yeah.
As you'll be familiar, Don, I'm sure. Yeah, no, but it makes total sense. It's just like a very cynical situation where no one wants to buy the bullish correlations, but everyone wants to sell the bearish correlations. And it's like, come on, like, give us a break. We've already suffered enough, because like the counter trend rally that we had in equities was like during the FTX implosion, right? And so we didn't get to benefit from that. And then everything nuked and dollar kept moving lower, and we didn't benefit much from that. So God forbid this thing posts a candle that isn't red or breaks out from its diagonal structure or whatever. It's just, we're only getting the downside, as Don said, and that's just not a good environment. Honestly, you want to see the opposite of that, and that's one of the things you can use to gauge market conditions and trend. Is like, when stuff is stacked up favorably, how many people are acting on it. When you have those more bearish correlations or risk-off conditions, how well is crypto reacting? And at the moment, it just feels like we're at an extreme when it comes to that, where none of the good stuff seems to really translate or carry over. But like all of the, if there's a sneeze in legacy world, we're right on the back of it, and I want to see a shift in that behavior. Maybe next year.
What do y'all think the legacy environment is most sensitive to right now? Inflation talk, or what? Are we getting into the be wary of earnings season?
Yes. Earnings and recession talk in general. I think those are the big ones. And these big banks. I think Goldman laid off a bunch of people recently. And in general, I think the inflation is still relevant. And even if inflation's peak, doesn't mean it's going to come down at the appropriate rate that the market is pricing in. If it stays sticky, that's really bad. So like peak inflation is one trade, but like reaching the 2 to 3% target is another matter entirely.
Very difficult.
Yeah, it's tricky. And also we saw from the last FOMC that the federal funds rate kind of endpoint projection is higher than it was previously. So I think they're going to have to keep that there keep that at a higher rate to get inflation back to sort of acceptable levels. And I think going into next year, it's definitely kind of earnings recession talk that's going to be a big driver on top of everything else. I don't think they're mutually exclusive. It's just the focus shifts.
What are they narrative wise in Europe? Like, what are they signaling? Are they saying they're going to, embrace, strong anti-inflation behavior, or are they just talking pretty soft?
Don, it's garbage here, right? Like hawkish as fuck. Lagarde was swinging.
Basically, they're saying like they're taking inflation very seriously, and I mean it's kind of funny because they're always fucking late to the party. it's like so America. Bad. America is like tightening and like doing shit for like half a year, and then the EU is basically like, oh shit. We should have started half a year ago.
Jerome's like making his breakfast and Lagarde's still asleep. Maybe that's like a good way of thinking about it. Central banks are really bearish. Like the Bank of England is just like reading fucking zero hedge nowadays. They're like, 50% inflation, recession, nuclear holocaust, the whole thing. So yeah, it's not great in Europe. I think Don made the perfect point. Like if you feel angry at central banks that that they're late to the party in America, it's like take a flight to Europe and see what the ECBs have been up to. I think Lagarde's new favorite number is 75, and I think she's been choreographing that the hikes, at least from the ECB, are going to come swiftly and in large proportions. So we're later than the people who are late, which is wonderful for risk, obviously.
What's the situation with like gas and stuff, people being able to heat their homes this winter? Is that still a massive concern, or was it magically resolved?
It's better.
It's better. It's much, much better. I mean, gas prices have been going down. In general, I don't think anyone's very worried about it anymore. There's been news coming around that basically like almost all governments expect to be completely fine. And that was like completely different just a couple months ago. And there was actually a time where the reservoirs were completely full. So like it wasn't even like they weren't even able to buy more just because they were completely filled up. So, and that's still like, it's still not bad. Like we have it really cold right now. And it's not a problem. So
my favorite, actually, one of my highlights for Weekly Open was when Ledger asked, like, very seriously to Don. He's like, I've read a lot about Germany, and it's very serious. And people are scared and struggling. What's the feeling on the ground? Like, I don't know. I can heat my house whenever. I don't look at prices. Like, just this complete fucking sociopath response. And it was the funniest fucking thing in the world. That's gonna stay.
I can afford whatever I want. Screw everyone else.
I'm trying to make the humanitarian case against the hard landing, being like, recession, unemployment. People kill themselves, and it's like, Don, what about energy? It's like, I don't care, it's warm. It's like, fuck.
German aristocracy is alive and well.
Yep. But no, I mean, it didn't turn out to be a big deal, at least so far. I mean, obviously it was like, it's not nice because people had to pay more and like people are struggling. But the whole, like I saw on Twitter and basically in the American media that Europe is fucked all over. Like that was kind of hilarious to see every time I see this. Like when immigration hits in Germany or in Europe, the Americans are like, okay, yeah, Europe is getting overrun. It's over. And then it's the same with like heating. It's always like, for some reason, at least our bubble of Twitter and kind of like the whole like crypto space has like this view of Europe that it's always like right before implosion, and then it never happens, and it just shifts the goalpost, which I find interesting. But yeah,
it's like the perma bears, except it's about like a continent or whatever, even like a political institution. It's very strange, but I mean, Europe isn't perfect, and also it's not as homogenous as Americans like to think. Like I've seen, for example, in some discussions, like a lot of American social discourse just likes to think in terms of black and white, which, it's a newer country, and for some people it's much harder to trace their lineage and doesn't have the history of colonialism. So some of that makes sense for America. But like you go to Europe and you just say, oh, well, you're white, therefore XYZ. It's like Europe's been at war with each other, a lot of those people being white, for centuries. If you tell, I don't know, like a Serb and a Croat that they're the same, they're going to kill you and then each other, So it doesn't apply as easily.
Yep.
We're getting told in the chat we have not talked about ETH. I don't have anything to say about ETH. There's absolutely nothing new on ETH to me. Is there anything new on ETH, y'all?
I'm actually surprised how well it's holding. I expected more weakness on the ETH front. On the USD pair looks shit, but on the Bitcoin pair looks pretty good to me, which is like, I hate that. And that's been the case for quite a while. It has made a higher low, but it's not really one that's like super sticky, given that we're right back to it. Like usually you want to actually move away from swing structure. And this one is starting to like, either you want to like just say, okay, this is like the higher low, or you're just going to say, okay, it's just another retest, and it's quite recent, which is not the best. But yeah, like for me, ETH USD is at support, but it's a support that we've tested before. So if we stick around here for too long, it starts looking really shit. The one chart that looks better to me is ETH BTC. Like I expected this to roll over. So far, it's just been going sideways. So,
it's looked the same for like a year or whatever.
Yeah. And honestly, I think that's impressive, especially given like you could say, okay, there's two parts to this range, like the upper range here, and then you have the lower range down here, right? Divided by this support line in the middle. And it's quite obvious where we've been spending more time, right? Like, I mean, this is just basically 90% of the time we spent up here, and then 10% of the time we was like kind of pulling back a little. And that's quite impressive to me, especially considering that the entire crypto market has gone to shits, basically. And this resistance has been tested a shitload of times. So the moment you actually start seeing strength again in the market, I think ETH's going to outperform again, which is good news for ETH holders. Problem is, if Bitcoin goes to shit, ETH's going to go to shit too, and then this can turn ugly real fast. So if you're an ETH maxi, you want to root for Bitcoin here, even though you obviously also want ETH to outperform, but you need Bitcoin to go up for this to actually play out.
Bitcoin to not die.
Yes.
I mean, the daily FUD, I've got a chart here, which is very similar to the Bitcoin daily chart for ETH USD. Those arguments are, you can transplant them to ETH if you like. Top of the range, spiked, closed back below, puked, and now retesting the midpoint from the underside. So whatever technical arguments we made for BTC, or perhaps lack thereof, they're also applicable to ETH. So, starting point above 1,200 would be fine. The clearer swing would be above 1,300. That would be cool, but none of that is currently available. It just looks like a failed breakout in a downtrend. And I am still, one idea continues to live rent-free in my head. It's becoming a paranoia at this point. The ETH catch-up thesis, how like Bitcoin is basically below here, and ETH is just held up the whole time. And we know that cyclically, when it came to the big implosions and sort of cyclical corrections, ETH over delivers, let's say, to the downside in tandem with Bitcoin. So Bitcoin pukes whatever, the final leg, let's say 50%, and then ETH will do like 60% or 70% or whatever, it basically does more, and it hasn't done any of that. It's been, enjoyed more upside on the counter trend rally, and it's also been enjoying this higher low while the market's been puking. So maybe it's relative strength, but I think relative strength in a downtrending market tends to be borrowed time, especially if Bitcoin has another leg. So I'm still assigning some mind share to the idea that ETH may at some point, if things turn ugly, play catch up to BTC and just kind of puke to its equivalent levels. I haven't fully dismissed that idea yet.
Brutal. I don't want that to happen, which is probably why it will. Anything else y'all want to leave us with? Something you're reading? The next Monday is the day after Christmas. Are we going to record that day or delay until later in the year? Do y'all want to do one before the end of the year, or just see it in January? Should we have this meeting on air?
I'm not going to pretend I have a social life or commitments around Christmas, New Year, or anything else. So, I mean, I'm around. Don's obviously a busier, a better rounded man than I am. So I don't know what his plans are.
I'm with my girlfriend's grandparents, actually. So I'm probably not going to be around on the 25th. But afterwards,
we can do it if you like, Ledger.
Yeah, may do it on the actual 26th, or may delay it a day or something, so Don can join us. We'll find out.
Yeah.
Anything y'all are reading and want to share before we go?
Ooh, not much. I've kind of been following crypto headlines still. I watch a lot of debates, which is quite interesting, mostly like moral philosophy stuff, and that can be a good break. I think it's important to have hobbies that exist outside of crypto. So for some people, if they're not trading, they're like in trading discords or on, that whatever group chats, Telegram communities. I think it's nice to have something that you can use to switch off completely and make you think laterally and across different disciplines, ideally not related to finance at all. So for me, that tends to be like moral philosophy and whatever politics type of stuff. So maybe that's worth poking around.
Ouch, that sounds. What I'm reading is actually similar, I guess. That's the modern day version of it sounds terrible. I'd rather read about the historical version.
Yeah, for sure.
I'm reading a Winston Churchill biography right now. It's like a 3-part thing.
Is it a bearish one? There are a lot of recent ones that talk about his exploits in India and his, colonial views and tendencies.
So far I would call it like fair. It's not
okay, nice.
It's not like bullish or bearish. It's just a story. But yeah, it's all the years leading up to World War I are depressing. Just the way the geopolitics in Europe were. But so that's what I'm doing this holiday is reading.
God, I want to make so many jokes towards Don in this segment, but I'm just going to mute my mic.
I mean, if I'm going to talk about stuff I'm reading, people are going to be like, "What the fuck?" But it's all just like baby books, obviously. Given I'm going to be a dad, so I'm like reading a bunch of stuff that I need to be careful of, that I need to do during the pregnancy, after, whatever, all that kind of stuff. So I don't think that really applies to most people in crypto.
Kaiser Don living his best life. All right. Well, thanks everybody for joining us. I don't think we have anything else. We should probably just end it. Merry Christmas, happy holidays. We'll see you probably sometime next week. Later.